one of the sharks even gave you an offer finally. However, that shark is not currently on the cap table. What was that experience like, and what finally happened?
So first of all, Shark Tank is a great platform. I mean, for emerging businesses and the kind of visibility and awareness that the platform provides, because that is clear, direct national exposure. We were very happy that we got an offer from Mr. Anupam. So, I mean, for us, the duration between shoot and going live was around 5 to 6 months. So we had met Mr. Anupam a couple of times. It's just that
Welcome to Sunday Investing. This is our 21st episode of our Know Your Promoter series. We have a very interesting company today, one which a few of you might have seen on TV on Shark Tank. We have with us Mr. Ayush Varma, the founder of Ravelcare, whose SME IPO is opening on the 1st of December and closing on the 3rd. Welcome, Ayushji, and thank you so much for making the time to speak to us. I want to start by just, this is a Know Your Promoter series, and we'd love to know a little bit more about you, about your background, how you started this business, what your journey has been like with Ravelcare. So that's probably the perfect place for us to start.
sure. So Rohit, first of all, thank you for having me. And yeah, very excited that the IPO is opening on the first of December. So yeah, just to start with, I mean, I've done my qualification from Mumbai. By qualification, I'm a computer science engineer, passed out in 2018. And November 2018 is when we incorporated the company. So, I mean, like we incorporated with the idea that there are like everyone had a lot of different concerns, but the market offered only generic solution. We wanted to offer something that's most suitable for them. So we incorporated in November 2018. The initial 2 years were spent entirely on research, formulation, R&D, and understanding how different hair and scalp type work and everything. And post that, we had a proper launch in maybe October of 2020. So we started with a single category, 4 SKUs, and over time we expanded the portfolio into other categories such as skincare, body care, scalp care. But the core philosophy remained the same. Like we still are mainly about problem solving through science and personalization.
Understood. So it took you almost 2 years from the time you
2 years
incorporated.
of R&D, yes. Yeah.
Awesome. I mean, that's a lot of, I think, grit and determination shown, especially
COVID
with
also happened.
COVID.
Yeah.
Yeah, COVID that shows that
COVID
requires
also
even more
happened.
grit, I guess.
Yeah.
So just help explain what your business model is. What does Ravelcare do? I think you mentioned personalization. So what it is that you guys actually do, and can you just share some facts and any interesting sort of tidbits about your business?
Sure. So I'll help you with how the model works. See, Ravelcare, the company was built on a diagnostic-led personalization engine. The flow here works in a way that a customer answers a quick assessment, receives a hair report, and then they receive a customized formulation that is made according to their concern. So, as I said, we begin with a single category, and we have replicated the same model across all the other two categories that we have launched. And I mean, in terms of a couple of highlights, we have more than 15 lakh user registrations on the website. More than 3.5 million people have already taken the personalization quiz and the overall assessment. And we have more than 5 lakh unique customers who have placed the order for their personalized products on the website. Quick commerce and everything, e-commerce is separate. So the core philosophy of the brand, we have converted more than 500,000 users into this personalization idea entirely. And we
Yeah.
have very strong repeat rate, which which is helping us a lot. So our repeat rate is more than 35%. And yeah, I mean, one of the main reason for it is that the product works. Whenever customer orders, they see visible improvements within a week or two, which builds trust. Second, we have a very strong retention marketing funnel. So this combined with CRM, our communication flows, everything is personalized, the post-purchase support. So all of this, creates trust and consistency. And when everything is compounded, then you're bound to see better retention numbers. So
And interesting. I think
that's it.
35%. So when you say 35% repeat, do you mean that after a certain number of months, 35% of your orders are from customers who have bought. Is this on a cohort basis, or do you look at it as in any given month, what percentage of orders are from a repeat customer?
So see, in haircare, I mean, primarily 90% of the business is driven by haircare.
Hmm.
So in FMCG, particularly in haircare, the consumption cycles are longer as compared to other categories. For us, consumption cycle window is somewhere between 45 to 60 days. So
Okay.
we only consider a 6 months LTV because measuring beyond it won't
Hmm.
be a very good idea in terms of cash flow and everything. We would want to have predictable revenue, and only considering 6 months LTV would help us with that. So, whatever numbers I'm telling you, this is our 6 month cohort LTV.
Got it. Understood. Okay, that's
That
a
way.
very impressive number. So can you walk us a little bit through your cost structure as well? So now this skincare, hair care, generally these kind of cosmetic categories are fairly high margin businesses. Can you just walk us through your cost structure? What is a typical, selling price of an SKU, and what are the cost components of that SKU?
Sure. So, our entire business right now is online. We haven't ventured into offline at all. And from like even online, 90 to 92% of the business comes through our own website. So
Hmm.
as I've said, there's a assessment and overall report funnel which is there on the website. Which like whenever you submit the quiz and everything, you get recommended a certain number of products and you get to choose combos. So since like our products are positioned in the price range of 500 to 600, but our
Hmm.
average number of items ordered per order is 2.4. So that brings our average order value to around 1550
Okay.
that way. And
Understood.
in terms of cost structure, I mean, it is very straightforward and transparent. On each SKU, we primarily incur three layers of cost. First
Okay.
one would be the acquisition that includes all the marketing and performance spend. The second would be the cost of goods. So right now, our gross margin if is around 75%. So our COGS is just 25%.
Right.
And yeah, COGS would also cover raw materials, packaging, the manufacturing cost, and everything. Then
Hmm.
third layer would be the operational cost. That includes everything from shipping, payment gateway charges, collection fee, platform and tech fees, other overheads that are tied, which are tied to fulfillment that way. And
Understood.
just to give you an idea, our shipping cost ranges somewhere between 4 to 5%. Our packaging cost is somewhere between 2 to 3%. Tech is 1.5 to 2%. So that way.
Understood. Understood. So one question that pops up when you look at the RHP is, I think from FY23 to 24, there was obviously very rapid growth. Then 24 to 25 was with a moderate growth. What exactly happened from 24 to 25? How do you see like what are you guys doing to push growth, from FY26 onwards? What are some of the key strategies that you guys are adopting?
Sure. So wonderful question, first of all. And just to answer that, see, in the previous year, we grew from 3.49 CR to 22 CR. It is a very sharp scale up for any D2C brand. Considering that we also increased our margins even with a 6.5 times the jump. So after a jump of that size, we had to spend some time for consolidation. So I mean, FY24 to 25 was positioned for consolidation. Instead of pushing for top line aggressively, we focused on working on retention. We improved the product quality further. We had better operating base, and we lowered down on the leakages and everything. So this year was the year wherein we worked more on the foundation side. Although we grew by 10%, but that is very meager comparatively. And looking ahead, we expect the growth to come from three levels. First one would be that we are going to scale up what is working for us, which is performance and content side, which also includes partnership, collaboration with certain known faces and celebs and all of that, which would further help us reach a lot of new people and give more visibility to the brand. Second would be we would want to have better distribution mix. Right now, 90%, as I said, 90% of the business is coming through our own website. So we would want that the split is in a very healthy manner, and a lot of contribution does come from other channels such as marketplaces, e-commerce, quick commerce, offline, and all of it, so that we're not dependent on any single platform. And third one would be that we will expand our product portfolio beyond haircare. Again, 90% of the business is coming from haircare. So yeah, we would want to have a more balanced mix across categories. We have already launched skincare, body care, and scalp care. So we
Hmm.
would scale up in those categories, and this will not only help us broaden our addressable market. It will, I mean, it not only it will help us increase our TAM, but it will also build a more stable and diversified uh, growth engine, so that
Hmm.
we can have predictable revenue.
Understood. Makes sense. I think there's a natural diversification once you have a certain category and a certain customer. It
Also,
makes sense.
also to add up,
Yeah.
yeah, sorry to interrupt. Just to add up, by September 25, we had also already grown by 40% as compared to last September, last H1.
True. True.
So that
Yeah.
is something that is working for us. Yeah.
Got it. Yeah. Hopefully that is more representative. So one sort of question on one of the sort of pivots that or one of the key pillars that you are talking about. Since you want to add new marketplaces, quick commerce, and so on, your core business today is a customization driven business. So how do you intend to translate that customization business onto third party platforms like quick commerce and so on?
Yeah. So what we are planning to do is, I mean, see, when you sell online, you need to have very clear messaging and you should know who you're targeting to. So we are launching a different range of products catering to this e-com, offline and quick com channels, which would be under a category of pro. It would be Ravel Pro, Ravel Professional. And the idea behind this would be that the Ravel Pro will be built with advanced actives, and it would be designed for targeted problems. So you won't be solving 5, 10 different problems at once. You'll only be solving exactly the problem that you came searching for. So the positioning for the brand is to scale on e-com and quick com, because it is very clear in terms of what it is exactly going to do. So our plan is not to replace the customization with this category. It's just that we are, introducing consumers to the brand through this category. As they engage deeper, the personalized range will become a natural next step. So ultimately, both lines are going to support each other without dilution for any of them. That is a core idea. Like, it would be more of an ecosystem. Everyone who's looking for targeted problem as well as customized problem will be able to acquire both of them.
Understood. Understood. So is it fair to say that your USP for the Ravelcare Pro will be this, some kind of treatment-oriented product, and as you acquire customers, maybe at a lower cost from these marketplaces, you eventually bring them to more customized products for
Exactly.
their specific
Yes.
that is there. Understood. Tanmay, over to you for questions that you may have.
Sure. So, as we are looking to go into marketplace and all this quick commerce, do we see our ROI getting lower? Reason being, we have to give some kind of the order value to the partner also, and also there are some extra costs than your normal, traditional selling metrics. So, how do you see that ROI getting regained even in the quick commerce and marketplace sales of your products?
Sure. So, I mean, see, there's a saying that sell where your customers are. Okay. It is very simple. Actually, selling on this e-com and quick com will lower the marketing spend for us. We'll have better ROI on these channels as compared to what we have on the website. And, you know, it will, it is mainly because the customer is already shopping on the channel. So whatever the additional commission is going to be there on, let's say, Amazon, if I talk about Amazon, we expect some commission and all the other overheads to be somewhere around 10 to 15%. Okay. So this additional commission will be offset by the lower marketing cost, which would be required to go acquire the customer as compared to our own website. And these platforms will also give us access to a wider and more high intent audience that we may not reach organically right now. The intent is very high on those platforms. So as a presence and everything grows, these channels would work more like a flywheel. It is a compounding effect. Once you get the flywheel rolling, you get a lot of organic searches, organic clicks, and then everything starts working in sync. So that that is the core idea. We have built decent equity in terms of brand awareness, and if the customers are already shopping on those platforms, it is wise to uh, capitalize on those customers to acquire them.
I would surely vouch upon this as I've seen your, Instagram, all the content. It has been very powerful and, very well developed content. Uh, so now I
Right.
want to understand what is your supplier arrangement at this point. So how do you source your, products? Do you have your own uh, production facility or you outsource it from some other vendors?
So currently our manufacturing is outsourced. I mean, we own all the formulations. R&D is done by, I mean, by our partners only. But all the IPs, formulations, and everything is owned by the company. The manufacturing and production is outsourced right now. So what we intend to do, which is one of the main objects of this fundraise, is to build an in-house facility. It would be more of an integrated unit. The idea is that it will bring all three. I mean, it will bring manufacturing, we'll set up our own R&D labs, and it will also have warehousing under one roof. So this will give us far better control on raw materials. We'll have better quality management and much faster turnaround for new product development, which we cannot do with the contract manufacturing system that we have right now. So that is the core idea. And operationally, it will also strengthen our supply chain since production, storage, formulation, everything will work hand in hand. Secondly, we are paying somewhere close to, I mean, 20-25% for job work to the contract manufacturers. So having our own setup, and again, we are paying additional for the R&D and everything. So having our own setup, it will reduce our cost of goods, our overall purchase cost, and then further improve our margin in a meaningful way. In our P&L, COGS is one of the biggest expense. So any savings there would like help us have much better numbers and everything. That is
And
the
what
core idea. It will give us benefit both operationally and financially, this facility that we're planning.
and what kind of timeline would the new facility have?
So we expect to commence the operation from December. It should be ready by July. We expect the first phase to go live by July of
July of
26.
2026.
July of
Got
2026. Yeah, we'll see. We expect to see the impact in the next year, 26, 27.
got it. As a revenue at this point, which is around 92% is towards the hair care segment. So is this a strategic choice or are we intending to, diversify this revenue as it is also some kind of a risk as one kind of segment contributes to, 92%, which is a very healthy chunk to your overall revenue.
Correct. So, see, for us, initially we had to figure out the market fit, which was one of the most crucial step for us. So we had to concentrate on a single category, and focus on hair care has been intentional because in the initial years we made a conscious choice to not spread ourselves very thin and not to try different categories at once. We went deeper into a single category. We found a strongest product market fit there, and it has helped us in building depth, which will you know uh, which has given us a lot of learnings which we can implement when we scale up other categories. And this couldn't have had happened if we had focused on all the categories at once. So, I mean, what our thesis here was, focusing on multiple categories from day one would just dilute focus and we would not be able to build anything meaningfully. So now the base, yeah, now the base in haircare is strong. That is the reason why we are expanding into other categories such as skincare and body care. And Yeah, I mean, we have already launched those categories, and over time, as I said, that our next step would be to scale up these categories. So we expect that by over time, this will create a more balanced revenue mix across categories while keeping the entire customization and our core DNA intact.
Thanks for answering that. So just an interesting question. How, do you keep your products into like category, be it in mass, be it affordable or luxury? How do you feel your products are at this point positioned in the market?
So right now, positioning, I mean, we have positioned ourselves into a mass premium category, and I mean, we are competing with the new age brands. We're not competing with the incumbents or the legacy brands or the massive brands at all. We are competing with the new age brands, and that is the core audience, the young India or the aspirational India who wants to shop and who is online, who is a very heavy shopper there. So the positioning in terms of pricing is into mass premium. It is not extremely premium. It is not massy as well. Somewhere in the middle.
What is our ASP at this point?
So ESP would depend on the platform where we sell the products. As I said, on the website, our AOV is around 1,550 rupees. Since we can control the entire funnel and we can, ask the customers to buy combos. But on e-commerce right now, our ASP is sitting somewhere around 700 rupees. Because there the customers have an option to buy a single product. So it would be dependent on a category on where you're selling exactly.
Thanks for answering all the questions. So our, last question would be, without giving any future numbers, what is the vision of our company, maybe it medium term or over 2 to 3 years or 4 years? Where do you see our company, down the line?
Sure. So in the near term, our focus is to scale our core categories, strengthen the customer retention, and build a stable multi-channel growth engine, not being dependent on any channel or any category. We want to keep improving the product performance, deepen our retention, customer relationships, and create predictable, high-quality revenue. Long term, our vision definitely would be to build one of the most trusted personal care companies in the country, and we want customers to see us as a high performance problem solving brand rather than any, gimmicky or claimy brand as such. We want to be positioned as a problem solving brand that delivers noticeable result and stands for integrity and consistency. So that would be the long term vision for the business, to have
Any message
transparency and
you,
efficacy. Yeah.
sure. Any final message you would like to give to your potential investors?
Sure. I mean, see, the company has been built on a very simple idea. Yeah, the idea was to solve genuine problems with honesty and science. And the trust and support that we got from our customers has brought us this far. And we are now entering a very important phase of growth. So, to every shareholder, I would just want to say thank you for placing your confidence. And definitely, we appreciate your trust. And I would warmly welcome you to the journey because it is going to be interesting. So, the message would be that we look forward to building a company that grows responsibly, scales consistently, and creates long term value for all the stakeholders.
Ayushi, that is a wonderful message to leave people with. I'm going to sneak one final question in, and this is a question that I think will interest a few people also. Now, people would have seen you on Shark Tank, and I think one of the sharks even gave you an offer finally. Uh, However, that shark is not currently on the cap table, in the DRHP. So, what was that experience like, and what finally happened?
So, first of all, Shark Tank is a great platform. I mean, for emerging businesses and the kind of visibility and awareness that the platform provides, because that is clear, direct national exposure, national TV exposure. It's a great platform. So kudos to the entire Sony team and Shark Tank team, and wonderful execution throughout the process. Our experience was very good, right from the audition to the shoot to the airing and everything. It was a wonderful experience. We had a great time on the tank as well. I mean, what you see is just a 15-minute cut of the episode. wherein the shoot happens for 1.5 to 2 hours, and everything is right on the spot. There's no scripting. There's no, you know, you don't know what question is going to come next. The sharks don't know which brand is going to be presenting next. So everything is right there on the spot. And definitely, I mean, so I, like, right from the very first season, Mr. Anupam was one of the, like, was my personal favorite. I mean, he knows everything. He's quite smart. And we were very happy that we got an offer from Mr. Anupam. So, I mean, for us, the duration between shoot and going live was around 5 to 6 months. So we had met Mr. Anupam a couple of times. It's just that what we presented, what numbers we went on the tank when the shoot happened, by the time our episode got aired, we were already doing 3x of that. And the valuation capping was set based on the numbers that we were doing on the shoot. So eventually, our ARR was near to our valuation that was offered on the time. That is the reason why some terms didn't work out. But we had like I had a lot of very productive and interesting meetings with Mr. Anupam in his office, and I mean he has a lot of insights and he's a great value add. So we are still in touch. It's just that the terms didn't work out. So that way.
Understood. I think that'll clear up that question. I think it's good to know, and
Yeah.
I do have a lot of people who have or friends who have participated in the Shark Tank process, and generally the value add of going on the tank is immense. So I'm glad you also had a great experience. I think with that we will wrap up this interview. Just to recap, so we've had Mr. Ayush Varma from Ravelcare, whose IPO opens on the 1st of December and closes on the 3rd. Thank you, Ayush, so much for your time, and wishing you the best of luck, for the IPO and your journey as a listed company. I'm sure it'll be challenging, but I'm sure you guys will do very, very well. All the best.
Thank you so much, and thank you so much for having me here. It was great chatting with you all.
Just a disclaimer, this is simply an interview with Ayush Varma and is in no way a recommendation from either us personally or the Sunday investing team to invest in this IPO. Please do your diligence, read the RHP, and make an informed call after consulting with your advisor.